if you're an investor and you're looking at a portfolio and you're thinking, how can I drive portfolio returns? What's my strategy around getting returns, but also taking on an understanding of risk? Again, historically, ETFs have been that core building block. It's inherently part of what they are. They're a low-cost tool in many cases, but they're also very liquid and they're also very transparent. So you can go onto any ETF provider's website, you can click through and you understand what you're investing in when you buy an ETF. That's exactly going to work the same as if you're building a core portfolio, and we've obviously usually called it a satellite, but if you think about it from a thematic perspective, you're probably tilting slightly. So you still may want to invest internationally and you may want to get exposure to the US, but you think that due to COVID, for example, that healthcare may be of interest to you, and you can tilt slightly to that area. Again, using an ETF, you can understand what companies you're investing in, what type of areas that they're going to be focused on, and that may help you decide, well, where do I want to tilt? How do I want to get potentially excess returns out of that portfolio when you're building it? Obviously, tech's been a huge area that I'm sure many investors have been focused on, but I think there's a couple of other areas that certainly are piquing many investors' interest. One, as I just said, healthcare and specifically global healthcare, and that wouldn't surprise many. We're certainly in a pandemic, but that's just not the one area that needs to be focused on. There's a huge other range of issues that sort of drive that return and why people are thinking about that. Another area that we're seeing a lot of investors talk to us around is the rise of Asia. So what does that mean? So it's Asia is China and Asia and what that looks like. And thirdly is probably an area what we call global reach. So not just diversifying internationally, but certainly thinking about companies that have true global reach and not span across multiple jurisdictions, Europe, US and Asia. When I think about the rise of Asia, it's a really interesting area, and I think when we think about who Asia is, we're very close to Asia, but maybe we don't understand Asia as well as we would some of the other sort of developed areas like the US and Europe. And Asia's, when we think about from a growth perspective, is certainly growing significantly faster than you would get out of Australia or out of the US or out of Europe as well. And there's that real shift from when globalization really took over 20 or so years ago, where the developed nations really moved towards Asia as that manufacturing hub. And there's no question that has slightly had a pullback. We know that whether it's a trade war between US and China or just the rhetoric that is coming out of what's happening in these spaces. But that's not to say that there hasn't been a shift from Asia of a change in wealth, how they've thought about their wealth. There's no question that from an internal perspective, and certainly from China, there is a massive aspirational middle class that is looking to spend that wealth and grow that wealth. And that has then changed how Chinese companies or Asian companies have been built and where they're looking to invest. So they certainly are investing in their own domestic space, but they're also looking internationally. So it's a really interesting area that I think is probably underutilized. So we know that also in Asia, that if you think about it from a global investment perspective, there's data points to suggest that around 10% is allocated to Asia. If you take a step back and go, well, how big is the size of Asia and what's the market cap? You're talking around 25%. So there is also an underinvestment in Asia as well.